Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking back in on the markets, and the bulls have kept it together after very brief consolidation. A strong end of the day yesterday, strength today. We had an initial bearish reaction to the financial sector's initial earnings. JPM, WFC, they put out their earnings and they pulled back. The good news for the financial sector bulls is they have tons of space to form a daily high or low. Could XLF be a daily bull flag? It's a possibility. But we're going to have to see some bullish reactions to names that have yet to have earnings like BA and MS and other names that we are waiting on. So a little bit of a pullback in the financial sector. Healthcare and tech sector kept doing their thing, keeping the bulls in full control. We have a new little daily high or low on SPY at 271.41, and here we are at the top of the bounce. Are we looking for a weekly lower high? You betcha we absolutely are. Is there any indication that it's been set at this point? No, there is not any indication of that. Resistance is 284.90, followed by 288.52, keeping in mind that this is pre-dividend and SPY was artificially adjusted for that dividend. So if I want to know these exact resistance levels from back in March that we are encountering on our way back up, I can use SPX, which does not have a dividend and does not artificially change the price. And for SPX, we're looking at 2882.59 as the next level. So the low of yesterday is now a key short-term support level for the bulls to maintain complete control. IWM, the top of the move, was 124.61. We broke that level today, but in a much less convincing way than a lot of sectors and a lot of markets. And the reason is XLF is the second largest holdings in IWM, and XLF was red today. So our daily high or low is 119.12 from here, and resistance 124.88. And again, dividend impacting levels before it, but there's some gaps to be watching. And the most important factor for me, rather than resistance, is the daily high or low. And can the bulls hold the low of yesterday? QQQ surging higher in a big way, led by Amazon at all-time highs. Netflix got within 2% of all-time highs today. Apple had a huge day. And we're looking up at resistance now on QQQ in the 219s. From the little bounce we had back in March. This weekly bounce at this point is massive. It's incredibly strong. And we are looking at the daily high or low. You could say 198.75 is our daily high or low. We hardly pivoted and pulled back significantly. I personally would still consider anything above 180.97, 180.86 as a daily high or low. That's a clear pivot. We pulled back. We broke the lows of the previous bunch of days. We established a support and we saw continuation. This is more sideways trading, not really a clear daily high or low for me. Hourly uptrend is our guide short term, and that was our guide today. We started the day with gap ups on a lot of names and we said, all right, we know we're overextended, but we also know that the next time we consolidate, we are just looking for hourly higher lows. And that was the case where QQQ pulled back first thing in the morning, bounced significantly, another hourly high or low. So basically, the hourly uptrend is our guide in the short term, and the burden of proof remains on the bears in this market, and they are proving nothing at this point. And I am not going to fight the bulls and fight the Fed until I get some reason to. XLV, daily high or low of 92.66, continuation with the bull move, 115 is the next resistance level. And the healthcare sector, number 3 holding in the S&P 500, is very strong as well. Hourly uptrend and daily high or low for our short-term guides. Biotech sector continuation. Its next resistance is going to be up at 87.31. And again, the same thing. Not really a clear daily high or low yesterday. I would still consider anything above 32.8 as a daily high or low next time we consolidate on the daily time frame. SMH continuation, little bull flag, daily high or low of 122.75. This is a little bit more of a established support level. multiple sideways days, little bit of a pullback, 3 days in a row, not much, but that's why it's a bull flag. Break of 129.64 resistance, and looking up at 132.73. TLT, still just this slow fade consolidation, still patiently looking for a weekly higher low compared to 166.15, and for this tightening range to continue to tighten up into May. And we'll need a daily trend change to be confident that our weekly higher low has been established, and we're not there yet as we close near the low of the day, but it's what we're watching for. And I'll also be a lot more interested watching the weekly exponential 12-period support as well. So after looking at all our sectors, again, you don't have to be bullish. Let's try that again. You can be bearish and not be in a bearish position. I can say to myself looking at this market saying, I do not like the risk to reward of bullish entries. And I said that today. This morning at the open, as far as day trading goes, I said, I don't like the risk to reward of bullish entries on this gap up open. So I'm either looking bearish or I'm going to sit on my hands. And my point is, I can be bearish and looking for a weekly lower high and not trading and just waiting for the setup to come to me. I don't have to be bullish or bearish. I can be all cash and patiently waiting for signals that show me that we are seeing weakness. And the most important factor for me, and something that I've learned over the years, is that the S&P 500 is not going to get any notable pullback unless the tech sector and the financial sector are pulling back at the same time. And over the last 4 trading days, we had 2 days last week, Wednesday and Thursday, of the financial sector bulls extremely strong, and the tech sector bulls, they held on, but they were much weaker. Financial sector this week is much weaker, and the tech sector is exploding. They're taking turns. And as long as that's the case, the market bulls are going to keep control of this bounce. We have to see both pull back at the same time, or we're not going to see any follow through from these bears. So let the trends and let the price levels be your guide. Poor fundamental bears right now are pulling their hair out and talking about rigged markets because almost every day we're getting this realization from people. I feel the light bulb going off in people's heads where, price action is not indicative of fundamentals. And price action doesn't really have anything to do with bigger picture in the short term. And that's what we're seeing right now. And that can keep up for an indefinite amount of time. The VIX is looking down at the 3620 low. The leveraged ETFs already have broken that low. 225 broke today on TVIX. At this point, TVIX has pulled back 80% from the $1,000 high. And there are veterans out there in this market that shorted volatility and are laughing all the way to the bank. And I am not one of them. I have not sat through enough of these massive bear moves. I was not trading in 2001. I was not trading in 2008. But you better believe this is going to my memory banks. And while I did profit on TVIX on some short-term bearish shorts, I am definitely filing this one away to remember the next time we see massive weakness, keep an eye out for a longer-term bearish entry in the volatility index. Gold, little bit toppy. Watching the 4-hour for a volume climax candle. This is the highest 4-hour candle that we've seen in almost 4 weeks. Still in a 4-hour uptrend if the bulls can maintain 170.09. Make that 17.09. So 17.09 is key support to maintain the 4-hour uptrend. And I'm also keeping in mind the dollar is looking for a daily higher low compared to 98.27. So if we get the dollar forming a higher low and we start to bounce, we will look for a lower high compared to 193. This equilibrium, as soon as we started pulling back here, we started looking for the equilibrium because the range was wide enough that we know that's the most likely scenario from looking at tens of thousands of charts. And that's what we're getting. And if we form a higher low here, a bounce on the dollar above 98.27 could be the indication for metals to consolidate on the daily. And they will look for a daily higher low, but that might mark our temporary tops. That's something to be aware of. If we lose the 4-hour uptrend, we'll look for a daily higher low on gold, anything above 1641. And we will look for a daily higher low on silver, anything above 1486. Bull miners got a bull break today, but it's a bearish reversal daily candle. So 3184 was our key resistance. In yesterday's video, I talked about potentially top fishing it, but I did not see an entry for the bears that I liked, so I left it alone. The hourly trend is still bullish, although actually we did break the low of the day right at the end of the day. If we break the low of today tomorrow, under $30, daily consolidation is underway, But just like gold and silver, there's tons of space for a daily high or low to form. So the daily uptrend is my guide on the metals. I will exit my longer term GLD position that I entered back here on April 1st. I will exit that when the daily uptrend is lost. And I'm keeping an eye out for the dollar for clues. Oil dumped today. We had a bounce into the end of the day. All out dump. We had the pits closing at 230. A break of $20 psychological support. I ended up making a bullish entry right when $20 broke. Many times, if you watched my Bitcoin videos or have been following over the years, you know that I like oversold bounces, and you know that I like those oversold bounces to potentially be marked by a volume climax breaking a key psychological level. So as soon as $20 broke on oil, I made a bull entry on USO, and I would have entered one more position if we dropped down to 1980, and then I would have put my stop in place. But fortunately, we broke that support level, the pits closed, and we saw a significant bounce. I sold a bit early, but profit is profit. And I locked in that short-term trade because all I was looking for was a 5-minute oversold bounce on that trade. So oil from here, bigger picture, anything on the 4-hour time frame under 23.97 is just a lower high. We know we have to change the 4-hour trend for any kind of follow-through, but again, big picture or bigger picture, anything under 28.32 is just a 12-hour lower high. So the question now is, can the bulls play defense off of 1925 support? And not only that, can they go on offense? So what I would need to see from these bulls as some proof would be a solid bounce on the 12-hour, knowing it's just going to look for a lower high, hold the low, and then change the 12-hour trend. And that's not going to happen anytime soon. Inventory report tomorrow, but that would take a couple days to develop. Natural gas, we knew not to trust the bulls. And if you've been watching natural gas for the last few months, that is our motto: do not trust natural gas bulls. Big bull move. Never change the daily trend. At this point, we have pulled back over 10% from that high. We are looking for a higher low compared to 1477, but I personally have no interest in the bulls in natural gas because they have struggled to change this daily trend. And the last time we saw a clear daily higher low and higher high, it has been multiple months. So that's where we stand heading into tomorrow. Tons of volatility out there. These cruise liners, RCL down 17% yesterday, up 17% today. Tesla, double-digit percentages 2 days in a row. Amazon, Netflix. It is a day trader's dream as far as volatility goes. I was scalping Tesla bearish today, traded that oil flip, traded SPY bearish at the end of the day, but exited pretty much break even. And we'll see what tomorrow brings. One day at a time, bulls keeping full control. Burden of proof is on the bears in the short term. The economy and the global macro situation is not enough proof. Price is our proof. Price is the only thing that matters if you are a trader. Have a good day, do good things, and we'll see you tomorrow.
Radishes are fairly close to getting ready to start nibbling at. Guess they'll probably need another week. Potato plants getting bigger. Planted some Brussels sprouts and some cabbage in front of the peas that are climbing up. Pretty much every morning I attach their tendrils to this chicken wire, and it's so crazy to watch the difference in the species, because you have this species, and I don't know which is which, but this is what they're climbing with. It's like an octopus tentacle that grabs anything and everything nearby. And the other species on the other end here pretty much just has 3, and it is much harder to get them to grab onto stuff. Much more finicky. There's my shadow head in the way, but pretty much have one chance. Lots of Chinese pink celery. It'll be interesting to see that grow. I've never grown this before. Lots of carrot sprouts. Haven't started thinning those yet. I'm gonna let them get a little bit bigger. And I have started thinning the beet sprouts. They're a bit bigger.